Welcome to Drumbeats, the must-listen-to podcast which explains why Indigenous partnerships are the key to securing successful outcomes in natural resource and infrastructure investment in Canada. I'm Mark Magnacca, and my co-host Rob Brandt and I are joined today by Aude Rajonson. In this two-part series, we explore UK and European sustainable finance with Aude, head of Fixed Income Origination at London Stock Exchange Group, and Aude is also based in New York. The LSEG oversees more than 1,200 debt issuers, representing more than $6 trillion in securities from over 90 countries. And Aude provides essential intelligence on how international capital markets serve communities seeking sustainable development financing. This will be a two-part series. In our first podcast, you'll discover why the UK and Europe host 90% of global sustainable bond fund assets. Understand how LSEG's £400 billion sustainable bond market has evolved over 10 years. And we also ask the practical questions you want answered about creditworthiness, deal sizes, currency flexibility, and rating requirements. In part two, next week's podcast, we'll dive deeper into the innovation spectrum and have some step-by-step guidance for accessing these markets. But first, let's understand what makes UK and Europe's sustainable bond market an essential consideration for the Indigenous peoples of Canada. Welcome. We have Aude Rajonson from the London Stock Exchange Group with us today. She's the Director, Head of Fixed Income Origination at LSEG, based in New York, and a French national, and a Sciences postgraduate. Welcome.
Thank you so much. Thank you, Mark. Nice to see you. Rob, nice to see you as well. Delighted to be on.
Hi, Aude. Nice to see you again, and thanks for joining us. I've done a lot of work with the London Stock Exchange over the years. A lot of capital has been raised by Canadian companies in the equity and debt markets, so it's great to have you with us. Do you want to start by talking a little bit about your own professional background and how you ended up at the London Stock Exchange?
Yeah, absolutely. So as Mark rightly said, I head up the fixed income origination for the London Stock Exchange. So essentially, my team, we are in charge of over 1,200 issuers that list their debt securities on our markets globally, whether it be from Australia to Canada to Europe to Africa. And as part of my role, I have ongoing conversations with heads of funding, treasurers, ministries of finance, when they seek to access the international market and will list their securities on our market, on our exchange, as a way to access international investors. I have been at the London Stock Exchange for about 5 years now. And prior to that, my background is actually in debt capital markets. So I used to work as a DCM banker at Standard Bank. I was covering a lot of emerging markets debt origination.
Great. Well, we're very pleased to have you with us today. And why don't we just start talking about the international financing opportunity? The LSE obviously operates in global capital markets, great reputation. How do you see the benefits of Indigenous capital markets for the Indigenous people of Canada and around the world?
Yes, thanks, Mark. It's a very, very good question. So maybe if I can sort of take a step back, the London Stock Exchange essentially is an infrastructure that sits at the heart of global markets. And our role as an exchange really is to facilitate the flow of capital between those who have it, meaning investors looking for return and yield, and those who need it, such as companies, governments, agencies, multilateral development banks, financial institutions. We as an exchange, as I mentioned in my introduction, we serve over 102,000 issuers that list their security on our exchanges. So that's over $6 trillion worth of debt from issuers from over 90 countries across 50 currencies. So it's a very sort of international communities that we have. So when you think about the scale of that global market versus domestic markets, the advantage that we see from our issuer base coming to the LSE really is in terms of funding options. The international capital markets offer access to to more diversified pool of investors that will include, wealth funds, global asset managers, development finance institutions, we call DFIs. And that enables issuers to raise a larger amount of debt than sometimes would in the domestic market, sometimes also achieving a lower cost of funding by virtue of having more investors coming into transactions and creating some price tension. So not only do insurers have access to a wider investor base, but they also have access to different types of investors, including sustainability investors or investors that have a specific mandate to only invest in proceeds of sustainable finance securities, for example. Another advantage that we see from global markets is that issuers do have the option to diversify their currency away from their sort of local currency and access longer term financing that may not always be available in the domestic market, and that can help finance some of the project. If you think about, main infrastructure, energy development project, they often require fundings over a long period of time, like sometimes 10, 20, 30 years, right, to match their investment horizon. That diversity, in fact, when you look at closer to home, when you look at the Universal Canadian institutions that regularly access the international markets through our exchange, whether it be the province of Saskatchewan, the province of Alberta, or all the major Canadian banks that list a program on our exchange, they have been raising various type of fixed income instruments through multiple currencies, and not just the Canadian dollar. So we have about 200 billion worth of debt raised by Canadian issuers across nine different currencies on the markets.
You mentioned the sustainability segment of the bond market, and it's from North America at least. Nice to hear that that's not a dirty word, and that there still is an active investor community in that segment. Can you tell us a bit more about the sustainable bond market in particular on the LSE?
Yeah, absolutely. So it's pretty timely, actually, because earlier this year, we celebrated the 10-year anniversary of the sustainable bond market of the London Stock Exchange. So we built this market back in 2015 in consultation with this market. And at the time, we became the first major exchange to have a dedicated green segment. So initially, it was just a green segment. And that's really because about 11 years ago, the market introduced the ICMA green bond principles that then followed by the social bond principles and sustainability bond guideline. So from that green bond segment, we then expanded to social, sustainable, and then later on, sustainability linked bond, LB, as well as transition segment, all under sort of the umbrella of the sustainable bond market that aligns to the ICMA principles. And over the past decade, the sustainable bond market has become really like a high profile platform connecting investors with an impact mandate and issuer. And really the mission for us, the mission of this market for us really is to facilitate the flow of capital I was talking about earlier between investors and those in need of capital with a sustainable purpose. So with our sustainable bond market, we work closely with markets participants championing issuances from sovereigns, supranational agencies, financial institutions, and corporates alike. Our sustainable bond market of the London Stock Exchange has almost $400 billion worth of sustainable debt across 16 different currencies. And we have a very sort of diverse base of issuers, including issuers from Canada. So it's a very growing and vibrant community that we have. And as part of this sustainability bond market as well, what we've done is we launched the a few years ago, we set up this initiative where we launched the Sustainable Bond Market Advisory Group. And this is how we keep the conversation going with multiple market participants, issuers, investors, advisors, to make sure that our sustainable bond market evolves with what the market needs. And this is how our transition segment and our SLB segment that I was talking about earlier came to life.
Well, you've certainly led the development of that, and the 10-year celebration was something. And, from a market that started at zero, yourself and your colleagues, supported by, the City of London, has done a great job of really making this the home of sustainable finance. What are the key differences between social bonds and other sustainable financial instruments like green or sustainability-linked bonds, especially for Indigenous issuance? What's in it for investors to invest in these type of bonds?
Yes, absolutely. So there's some clear distinctions between all of these type of instruments. So typically, when we talk about green bonds, a green bond is when the proceeds of the bonds are used to finance project that has a clear environmental benefits, such as climate change, protection of biodiversity and ecosystem, protection of forests, and so on. An example of that is the country of Hungary regularly issues green bonds that are used to fund the rehabilitation and restoration of forest and conservation efforts, forest. And so these are the type of green bonds that we've seen. They are by far the largest portion of the broader sustainable bonds issued every year. They're about 60% of the total sustainable bonds that gets issued on a global level. When you think about social bonds tend to have a focus on the people and on society. So the proceeds are used to finance projects that have clear social benefits. So example of that is, social housing, access to education, access to healthcare, social care, access to basic infrastructure, where really the goal is to help the population that live below the poverty line, and low-income population, the uneducated, the unemployed, the vulnerable groups, really. So it's about improving the standards of living. The category of social bonds really expanded during COVID, actually, where basic infrastructure healthcare became a core part of our needs. And the African Development Bank issued a $3 billion, what they called the Fight COVID-19 social bonds back in 2020. Where essentially the proceeds of this bond were used towards enhancing access to essential services, supporting healthcare, employment, water and sanitation to really mitigate the impact of the pandemic. We've seen other social bonds, the likes of the UK publisher Pearson, who issued a 350 million sterling social bonds, where the proceeds of that bonds were directed to education product that target the sort of underserved learner and communities, such as people living below the poverty line with disability or the unemployed population. Sustainable bonds are quite simple in a sense they're just a mix of both green and social project. And then you have sort of like a couple of sort of innovative structures that came to life over the last few years. You have what we call the SLB, the Sustainability Linked Bond. And those are forward-looking performance-based instruments where the issuer is committing to future improvement in sustainability outcomes within a predefined timeline. So a good example of that is the government of Uruguay, who issued its first SLB with a step-down coupon mechanism that gets activated if the government reaches certain environmental targets over time in line with the Paris Agreement. And then you have another category of transition bonds. It's actually a step that we took forward back in 2021 with the introductions of that transition bond segment on our market, which is designed for issuer financing sort of clearly defined climate transition activities. For example, to help carbon-intensive industries finance their shift towards more sustainable operations. So an example of that is the UK company Canadian Gas raised a transition bonds in sterling to support the decarbonization of their gas distribution infrastructure. So it's often targeted for what we call the sort of brown industry that it's looking to transition towards more sustainable operations. So given all of this structure, Mark, to your point, I think the great thing is that there's so many options available for the Indigenous community. And just to give a few examples, I mean, they could look to issue green bond for land conservations, or a blue bond for lakes or protections of lakes and rivers, or even a social bonds for community development towards reducing poverty. Knowing that all of these structures have been tested in the market. And when you think about the universe of investors that look at these instruments, it's the universe of investors that have a dedicated mandate in impact investing. And those investors will be looking for new investment opportunities to diversify their portfolio away from vanilla bonds. They will want to seek returns for their portfolio and also be in alignment with regulatory framework. So really, a sustainable instrument represents an opportunity for them to invest, especially as the context of sustainability debt is currently lagging behind demand, which makes those sustainable bonds often very attractive and oversubscribed. If you think about it, the universe of sustainable bonds, they represent about a volume of $1 trillion issuance back in last year in 2024, which actually was a new annual record last year. But it's really only about 10% of the global bond issuance that we see for the year. So it's a very small part of the market. And our role as an exchange is to continue foster that sustainable development and an investment. And one way that we do that through our exchanges is through ensuring that there is a high degree of transparency in the market, so that it gives investors the confidence to invest. And that's a responsibility that we take seriously, especially in the context of, wanting to avoid what we call greenwashing. So we have defined a series of terms and conditions for bonds for them to be deemed eligible for our sustainable bond market. And those align with investment criteria of the investment community. So for use of proceeds bond, for example, these criteria will typically include the requirement for issuers to set up a sustainable framework, seeking a second party opinion on this framework, as well as the publication on an annual reporting on the allocation of the proceeds raised, such as what we call an impact report.
Wow.
That's really interesting. Yeah. Aude, and some big numbers there. $1 trillion, was it dollars globally?
Yep. Yes.
The sustainable market.
What innovations or trends in sustainable finance could support and empower Indigenous communities that you've seen in your experience?
So the very interesting part of sustainability is the innovation that keeps coming out of the asset class. And innovation in this space is driven by issuer needs, community needs, investor appetite, and regulatory frameworks. Those incentivize the market to constantly come up with instruments that are more diverse, credible, and impactful. And this is really the reason why over the last few years, we have seen interesting structures coming out more broadly on the market. Those include, the market has seen blue bonds for the conservation of ocean and support of the fishing industry. The Seychelles, for example, issued a blue bond with the support of the World Bank. We've seen Nordic Investment Bank issued a blue bond for the protection of the Baltic Sea. So you can see how blue bonds are an innovative tool, could be an innovative tool for financing lake conservations in Canada, given that Canada is home to over 2 million lakes.
And 3 oceans.
And 3 oceans. Your market has also seen some rhino bonds, what we call rhino bonds, right? So the World Bank back in March 2022 issued a rhino bond in dollars to fund protection of black rhinos, which is a critically endangered species in South Africa. We've also seen debt for nature swaps, where essentially there's a commitment from countries to cancel a portion of their country's external debt in exchange for their commitment to fund environmental conservation project. And it's a structure that it's largely issued by emerging markets because they're the one facing high debt and facing climate vulnerability. So you've seen a lot of the structures issued by Latin American countries, actually, the likes of Ecuador, Barbados, Bahamas, Belize. You may have seen also structures like forestry and biodiversity bonds. And actually, one of the very sort of relevant structures that we've seen earlier this year was launched by the sort of US organization Everland, where they issued what we call an outcome bond, a 50 million outcome bonds, where the proceeds were to protect the Amazon forest and its indigenous and traditional population under the Equitable Earth standards. And we're very proud at the LSE to have always been at the forefront of innovation, and we're constantly pushing for innovation and new structures. And because of the international nature of our issuer base, but also of our group footprint as part of the London Stock Exchange group, where we have presence in about 65 countries, our ethos is to serve and work closely with local economies throughout the world. So we have been the place of many what we call first and innovative structures. We worked with pioneer transactions in sustainability. Also, earlier this year, we worked with the climate investment funds for the establishment of their capital markets mechanism program, which is an innovating financing backed by the World Bank and a pool of MDBs to fund climate project in the sector of renewable energy, energy efficiency, sustainable transport, green industry. We've also were the first to see the first SLB with a step down coupon mechanism that I mentioned earlier, that were issued by a sovereign, and the sovereign was the government of Uruguay. And we've also seen the likes of the metropolises of Tokyo in a different part of the world that listed their sterling resilience bond on our main market. And this transactions marks the first in the world to carry the resilience certification under the Climate Bond Initiative's Climate Bond Resilience Taxonomy. And the proceeds of that are used to fund flood defenses, coastal protection, and other sort of disaster risk infrastructure for the city. So we have been able to support local communities and issuers and really emphasize the global reach of their innovation so that the transaction gets to be seen by the international community, but also by other similar communities that live in other parts of the world. And really by listing their securities on our markets, not only does the issuer position itself as a pioneer, but they also get to set a trend in a way that sends a signal to other communities or issuers in other parts of the world about what's possible. And our role as our exchange is to emphasize that messaging.
I think we've seen that. We had a gentleman on our podcast a week or two ago who was in Latin America and talking about the leadership that Canadian Indigenous nations have been providing for other Indigenous nations. So I think that's a very timely comment. Thank you to Aude Rajonson for sharing their insights with us. And thank you for viewing and listening. Mark your calendars for the upcoming 2026 summit taking place on the 8th of April. Be sure to share, subscribe, and leave a review on your favorite podcast channel. Thanks for listening to Drumbeats. Until next time.